And now, after talking about what is ahead of us, let's come to today's session. And let's come to the fact that today we are going to be talking about finance, funding, and factoring. And this session will be moderated by Sunil. And of course, our star presenter today is going to be Sunil Malhotra. And before I actually tell you or get you into the conversation, let me first go straight away and introduce Sunil to you. There you go, some introduction for Sunil. Sunil is a corporate financial management consultant, a chartered accountant by qualification with experience of over 30 years. He facilitates companies in their growth through integrated financial planning and raising loans at a very low rate of interest. He's a firm believer in building strong relationships with banks, institutions for long-term growth. In his opinion, equity, and in particular private equity, is going to play a major role in the growth of manufacturing industries in India in the next 10 years. In his 24 years of service with corporates, he worked for 5 companies and till now have raised more than 3,500 crores through debt and over 700 crores through public issue and private equity. Now he's advising various SMEs, including garment manufacturing and exporting companies. And in recent past, he assisted over 25 SMEs and garment companies in raising funds. Among notable companies where he worked in garment and export sector were Opera House Exports, Kiran Overseas Exports, and Finis Exports Private Limited. So welcome, Sunil. It's an absolute pleasure to have you with us on board.
Thank you, Govt and Sunil, giving me the opportunity on the SowtexConnect platform, and I welcome all the participants as well.
Wonderful. Thank you so much, Sunil. And of course, as I said, this particular event would be moderated by Sunil. But before Sunil takes over, I would like to ask 2 questions. I would like to ask first a question to you, Sunil, and then I will come back to Sunil. Okay. So Sunil, first of all, I would like to ask you, what is, we've been talking about finance, funding, factoring. This is a topic for that matter. What exactly is finance, funding, and factoring? Can you tell us, please?
Yeah, sure. Okay, so these are the terms sometimes loosely used as such interchangeably, but there is a definite distinction as far as the business entities are considered. When it comes to finance, we from the business parlance need to understand it from the financial management perspective. And finance actually is a strategic planning, sourcing of money, and the deployment of the money. These 3 aspects need to be, there are several other aspects in finance and financial management, but these 3 are the ones which every business entity needs to focus on to if they want to be in a complete financial discipline. That's one. But when it comes to funding, it is just a resource mobilization, the sources from which the money has to be arranged or it comes. And then factoring is just a product whereby post-sales, wherever we have the receivables, the debtors, that money can be preponed by way of receiving in advance by paying certain charges. So factoring is a very small aspect of overall financing, but yes, it's a very important tool at times to raise money quickly, and the corporates definitely need it on occasions to ensure that their business runs very smoothly. I would like to focus more onto the financial planning aspect, and in due course, I will be coming onto more and more in detail, because this is an area where we generally, as in the business houses, forget. Planning actually is not only for raising money or deployment. It starts from the moment we start thinking of even acquiring an order. If the finance is not kept in mind at that point of time, what are the timelines, what the business cycle, by when we will be getting the money, the thought has to be given at that point of time itself. Generally, in the zeal of getting orders and, and execution of orders, we do tend to forget it. And my experience says that, if this is something which is not kept in mind right from the beginning itself, the business houses tend to face challenges. And that's where particularly the SME segment need to focus more on to, as they have to manage within their own limited resources, this very particular aspect as well.
Super. Thank you so much, Sunil, for the share. And before I actually go ahead and talk more, I want to go to Sonil now. And Sonil, I have seen that you spent years in the textile industry and have been on to the manufacturing side of it. And now you are bringing the community together and the buying and supplying. And you keep talking to a lot of textile manufacturers in the space. So I want to ask you a question, and I know that this is very, very pertinent at this point of time, that what are the kind of challenges you feel that the industry, the textile industry is facing at this moment? And then let's talk about further on this. I would like to hear from you about the challenges.
Thank you, Gagan, for asking this question. And, the kind of dynamism we have in our textile space is quite complex. So, at the same time about last year when we were talking, and we were, when I was hosting some of these sessions, the challenges were on the reverse side where the business was declining, there were bankruptcies happening across in the world, the buyers were not making the payments on time. And suddenly the scenario I would say, in the current times, which is still a COVID times, this scenario has completely changed. The market has bounced back in a much bigger way than it was anticipated. A lot of corrections has happened in the ecosystem. And, I would say it is for some of the friends who are there in this session today, they would be knowing that today the challenge is different. Today the business is there, but there is limited means of servicing that business. So while we have Sunil here today on the call, and I'm sure he's there, he understands the ecosystem, he's already worked with the buying house. Today the system is something wherein while the demand is coming back, the buyers are coming with a lot of stringent measures coming in. Quality is becoming a new norm. Compliances are becoming a new norm. Buyers are looking out for innovative products. Sustainability is coming into the ecosystem. So with all these things coming in, and the major challenge right now is there is more business than the business that people can handle. So having this kind of challenge is like a very unique thing. Not that we have never had this challenge earlier in the sense, because in the season time we have more business. But right now the demand from the domestic side and the export side, both has suddenly come up because people were sitting idle, and now everybody is out there shopping out, and the people, the brands have, or the big suppliers and the supply chains, departmental stores, they have not anticipated such a bounce back on the demand. So there is much more business which is there in the plata, especially for Indian subcontinent, and now the demand is reversed. The only one area that I would to just start my today's conversation with Sunil ji is how do we anticipate to bring that demand into the equation? How should we service that demand? So the current first challenge, what we feel, which is there in the ecosystem, is how fast are we going to service the demand with the lack of finances that are, or limited finances that every business entrepreneur has. So because majority of the ecosystem is dominated by the medium size and the small size players, how do we mitigate this challenge?
Well, Sonil, very well put forth. Yes, there are challenges arising, and these are new challenges. I would say unprecedented challenges which we are seeing across all business verticals, and textile is an area where these challenges are even going to be much higher. First of all, the demand has taken a U-turn. I would say, the way we saw post-COVID and this way we are looking at, it has been actually caused by multiple factors. One is that the production was reduced as such, and therefore the inventory levels got also reduced. Now there's a lot of inventory building which is taking up, and that is something which is actually coming back to the manufacturers in the form of demand. Now, is this a permanent demand? or this is going to be a temporary demand. That is something we have to see, because these all developments are over last a quarter or so, not beyond that. We need to observe this for a longer period to realize that is this a long-term demand, or is this a short-term demand? Having assessed this, the other area which is very important and comes out of it is the requirement of money which comes out of it. Well, even if it's a short-term demand, we definitely need more money. Coupled with that, the prices are hardening. The liquidity in the market is substantial. We have seen that the metal prices have gone up, and the other verticals will also not be untouched. We may not have seen, because of the previous supplies in the textile segment, a substantial rise in prices. But yes, definitely the prices are going to rise substantially all across the globe. The logistic cost has gone up, and therefore we are going to see a substantial increase in pricing sooner or later, even in the textile and garment segment. Now, this furthermore aggravate the problem in terms of requirement of working capital. Herein, I would say that 3 months or 4 months period is too short a period to assess expanding the capacity. We must need to assess and first of all mobilize other areas, wherever the capacities are lying unutilized in the nearby areas. Definitely work on not refusing the orders as such. That's not a good criteria at this point of time. Post-COVID, we have seen number of units getting closed down. Either there should be an effort of running that on our own, or initiating an action whereby those people come back and supporting them so that the production can be catered to over this short period of time. It's important not to commit any capital cost at this point of time, because this is too short a period. Almost every industry, everyone in the industry is stressed in terms of liquidity. Making a commitment towards capital without raising the capital itself, onto expanding capacity, can be very counterproductive. So though it varies from entity to entity, but I believe majority of us are today in a position where we don't have enough liquidity even for working capital, what to talk about expanding our capacities. For that, definitely we need to have a separate plan where the equity gets raised, and in proportion to that, the debt will definitely also come. But right now, the focus has to be on mobilizing resources through other channels where capacities are lying unutilized. And on top of that, since the demand is more, we need to also approach back to those buyers for providing payment terms favorable to us with higher margins. It's in normal course, as in when the demand is higher, the price realization should also be higher. One should not mind paying a slightly higher operating cost to another entity which is providing us the services for production and going ahead with it, rather than committing to the capital cost. So we still need to see at least for another 1 to 2 quarters whether this demand is going to be permanent or not. And once we realize that the demand is permanent, then definitely the capacity expansion should be thought of. Yes, this is an excellent time to start thinking in terms of that. If we have to expand, how to strategize to raise equity itself. As far as the equity raising is considered, trust me, there are now much more avenues than what used to be 10 years or 20 years or 30 years back, when in fact, textile sector seems to be the most attractive sector. Today, there are many other areas, sources from where the equity can come. So, but yes, it does warrant strategic planning. It does warrant the financial discipline, the transparency in the organization, and only thereafter the equity comes. But we have the time to plan for that as well.
So you touched upon a very important factor that there is more transparency required in the ecosystem. What is happening currently is the fact that businesses, especially the business which is coming from outside India, and some of the new business which is coming from outside India, because there's a strategic shift which is happening in the ecosystem, which is now making the buyers ask for the products which were not core to the Indian subcontinent. the idea was more mass scale productions and much more on the cotton or cotton blend side. So India was not used to this kind of ecosystem. Now, having this as part of the supply chain, there is a lot of innovation and technology upgradation which is required in the short term to the medium term. Now, knowing that the scenario is, nobody knows whether the scenario is the short term or a long term, manufacturers and especially the suppliers in the ecosystem, they are kind of a little reluctant to invest into the further capacity expansion areas. What kind of policies or subsidies do you think, or what kind of bank support do you think can come forward at this point of time to relatively, enhance this kind of area where people can come back and, be more positive and proactively look at investing into this particular area?
Okay, see, this is a transitional change which is taking place, and anything like this, if it happens, it has to be over a long period of time. The government of India also has come out with a policy in relation there too, and the policy particularly which has come, which is productivity linked incentive scheme, that also is going to last over a period of next 8 to 9 years. Now we all are today talking about technical textile as well, and which is also going to play a major role in the years to come. Now that's a different vertical altogether, and as I said, this is very important. First of all, we need to assess as to how much surplus liquidity we have beyond the capabilities we have to deliver basis the capacity which we are currently run. If we have surplus money available, only then we need to get committed to other areas. Prior to that, there would be other areas we need to address, which is in terms of innovation or technical upgradation onto the technology side. That should precede the capacity expansion. The technology upgradation is something which we need to do, because that will further help in reducing the cost. Once the cost gets reduced, there will be further surplus available, which needs to be used for the capital expansion. When it comes to the support available, as I said, there are support available now under the government schemes, and even under MSME, there are incentives which are available. One need to analyze vis-a-vis their own business, to what extent the capacity expansion has to take place, whatever overall cost of investment is, irrespective of whatever incentives are available. One needs to assess how much its own equity available is. Once that is assessed, commensurate to that, the expansion needs to be planned. There are specialized agencies and consultants who are providing advice onto it. I would say, just simply rather than jumping onto capacity expansion, one need to definitely assess through these agencies and consultants that what kind of investment it actually outlays. India has seen very little onto this side on this side of manufacturing, and we precisely do not know how much what is being assessed is applicable to us. Large scale production has taken place in China in relation there too, where the cost of production was much lower, which now gradually is rising there as well. So we are in a position to compete. Incentives available are there, but they are generally post the deployment of or implementation of the project that the government provides the incentive. Every kind of subsidy which comes is after the project is actually completed by the entrepreneur, and it's not during the stage when the project is coming up. One needs to keep that in mind. That money has to be utilized at the later stage. Right now, the viability has to come from what the project cost is going to be for capacity expansion, and from where the money is coming, what the cost of that money is. Until as this is assessed, if we start diversifying, putting more capital into it, just the basis that there would be certain incentives available, it can be a very difficult proposition. So incentives are available, no doubt. One would get, yes, there are a lot of governments also, particularly 3 or 4 states are providing subsidized land and other subsidies, which helps in reducing overall cost of production, and which is very important. So one can look upon that. That's why I said, it's important to analyze the overall cost of project, and see, where does we gain over it and then move in that direction. But if we start thinking in terms of only subsidy coming from government or other agencies, it doesn't work on a standalone basis now. The latest scheme, the latest one which the government has announced, the productivity linked incentive scheme, they are huge. Government has put in a number of 10,683 crores as subsidy therein. But the entire subsidy is only after the project comes up, the production starts, and the entity achieves a particular turnover that the government will be providing the subsidy. The best part is that, and they all are for very large scale productions. But the best part is once that subsidy comes into 3 or 4 years down the line, we all are going to gain, because that subsidy benefit will percolate to all other ancillary units, ultimately the consumer. So we are going to have good times in the period to come. Right now, we need to have more sustainability with slightly higher profit than what we have made, because the demand has come back.
You have just given out a very rightful topic for this.
Sorry, Sunil.
Sunil, we can't hear you. I think Sunil has, yeah. All right. I think I'll have to take some questions in. I incidentally cannot make me spotlight. All right. So, all right, let's wait for a second if Sonal can come back in. All right. Okay, Sonal has dropped in. So let's get going for that matter. Sunil, not wait. I'm going to spotlight myself here at this point. And yes, so let's go ahead and talk about the next couple of things which are also very, very critical in this. So as I believe just now, because I was not on the thing at this point of time, you were talking about the capital requirements and the demand bouncing even more before the pre-COVID, isn't it? Right? Yes. So let's get to the next question, Sunil. And I know for that matter that these days buyers are frequently asking for more innovation and sustainability. These kind of things are happening big time. And frankly, this bit of innovation and sustainability requires a lot of technology upgradation. A lot of technology upgradation is required at this end, right? So I want to ask you this question. People at times, it's a catch-22 situation for them. They are not able to, one, they want to get work from the buyers. On the other side, because of the investments which have to be done, they are kind of do not put their hands into it. And Sonal is back in action. Sonal, I took up your question in the meanwhile. So Sunil, what is that you have to talk about this catch-22 situation of technology upgradation with the kind of money which we have to spend? How do we really go by this situation?
Okay, you see, we need to understand in the current scenario the requirement, and also need to assess the conventional family-run businesses which we have largely in textile and garment, and on the other side the new age online companies which are jumping. Primarily, I would say e-commerce companies. They are in that domain, but yes, they are also being catered to by all these conventional family-run businesses. Now, what's really happening is and transforming is that their part of the revenue is going from the family-run houses to these e-commerce companies. So they also are spending quite a lot of money, but yes, overall, a part of the revenue is getting shared as such. And when it comes to even exports, therein also the accessibility of the buyers has been to much more entities than it used to be in the past. Therefore, irrespective of whatever the stage and the situation is, every entity is required to keep set aside a specific fund for their technology development. We cannot escape from this. This is something, whether buyer stipulates or not, it is highly warranted. Even if the buyers are not stipulating, it is getting highly warranted. The good part is when such kind of things are happening, though it is a cost which will be a continuous cost, but initially at one point of time there's going to be a marginally higher cost. This has to be taken out of the working capital itself if one doesn't think in terms of raising equity for this also. Now, I am actually going to raise a very important point here. Largely, the family-owned businesses are averse to raising equity from outside. They have always pumped in money from their own sources and heavily relied upon loans or debt from banks. One has to keep themselves, away from the past strategy. It's not even advisable strongly to put their every part of money into the business. Sooner or later, if one has to compete with these new age business houses, one has to look upon bringing in equity from outside, because when equity comes, there is no commitment as to timely return of interest or any payment. There are certain timelines when the equity comes, but they are long-term timelines. It gives enough time for a business house to expand. But one definitely needs to focus onto this area. In next couple of years, this should be the part of the planning of any business entity. If they need sustainability, they want innovation in their entity, they want to compete wherever it is, then one needs to bring equity into the entity, because there is no cash flow pressure. I would say, this is the best part of raising equity, because you get liquidity with no immediate commitment to pay to service this part of the money. So, and that's where in a lot of businesses, the viability comes, the higher profitability comes. Because initially, whatever we do, there's a higher cost, and the cost goes down over a period of time as the capacity expansion takes place. And therefore, this is something where every business house need to rethink their strategy. And if up till now they have not thought of, until unless they have got huge cash surplus resources, they need to bring this factor into their business vertical. If it doesn't happen, then these new age business houses are going to walk away with most of the businesses, because they actually started with technology itself. So they are ahead of the family run business houses. Now, what this shift has to come. If it doesn't come, it's very, very difficult to sustain. We are coming across situations. I'm coming across a number of situations in the textile industry itself, where strongest of the players today are facing challenges as to cash flow. And we have seen COVID times. We have seen challenges. We have seen buyers actually not fulfilling commitment. We have seen, the goods lying at the port and buyers not taking the delivery. So all these need to be addressed post-COVID scenario. We have learned a lot. We have learned a lot through hard ways, and it is the time that we address each and every aspect to it. There were contracts which had no clarity as to what happens if COVID-like situation happens. Now we know about it. Now, cash flow management is the foremost thing. Now, therein, equity plays a very major part for expansion. If we are really talking about expansion, then anything, if it is not getting supported through equity, I don't think even the banks and the institutions or lenders are going to support. If you are taking out money from your working capital, it is going to hamper your existing business operations as well, rather to talk about expanding. So unlike past times when banks were highly supportive, or probably I would say banks had not substantial control provisions, supervision provisions, and the entrepreneurs could manage to have higher funding than it was actually warranted, which definitely resulted in many business houses going down also. But then now the banks are equipped with such kind of technology. They have also made upgradation that they can supervise the things, and therefore one has to have an optimum combination of equity and debt if they really want sustainability.
Another important point, what you just mentioned out the fact that equity becoming a major area, and especially with the stock markets and global markets bouncing in such a way that there's a lot of money coming in from the private equity side and the foreign investors coming to play. But textile as an industry, we still haven't seen a traction coming into this particular area. What are these, for example, let's say you just touched upon another important topic, which was family businesses. If today, considering the demand stays stable, and we are looking at a constant pouring of business coming from, let's say, US and Europe over the course of the next few years, as there is a strategic shift to the policy of, being from the one country, they're shifting into other countries. Now, India or Indian subcontinent, people do not have manufacturing bases to support that large-scale orders. So if there is an order coming from, let's say, Walmart or from Primark or H&M, Zara, we are always equipped to handle the short to medium-size orders. We are not equipped to handle a very large-size orders. How do you think there can be a way that people can unlock their small manufacturing setups or the land bank, which most of the textile entrepreneurs do have at this, and scale up to a level where they can make a bigger format? How do you think banks or any other financial institutions can support this particular area? I know there have been a lot of recent government policies which have been rolled out from MSME and other areas. Any particular area where you think people should go and look for those kind of departments or institutions to scale up their manufacturing sector?
Okay, for scaling up, one is like, you touched upon rightly, a lot of textile owners have their money locked in their fixed assets. I would say if that is the situation, then part of that must be unlocked. Once that happens and the infusion comes in, another part of the money in the form of equity can come from the external sources in the form of private equity, or there are some private investors showing very keen interest of making investment. What they are actually wary of is transparency. Once there is a transparency, the investors would be there to invest into the company, and then subsequently comes the debt and the government support part. So unlocking our own capital potential is first, which if it is available, that needs to be done. And along with that, if somebody doesn't have even that provision, we should start exploring possibility of actually consolidating. You very rightly touched upon. Today we have got small and medium-sized manufacturers who cannot cater to the requirement of very large size orders placed by the top buyers sitting in US. Now, but what's the harm of exploring possibility of consolidating 2, 3, 4 units itself? And if it becomes one entity therein, then even this can be addressed. We actually don't think in those terms. One just thinks of these reservations which have, of consolidation, different mindset. But this is the time, either, we are going to lose it out, or we can consolidate and gain furthermore. So besides, outsourcing work, which also will not get addressed to at such a scale, consolidation by certain business verticals, is highly warranted. We always talk about it is not possible. It definitely is possible. Who stops? If there are 4 exporters, having a turnover of say 25 crores, 30, 40 crores, and they consolidate and and they come under one umbrella and start doing, and so it gets multiplied not by 4 times but much more than that. It's all resource mobilization at one place itself. The units can be at different places, but execution can be simultaneous at all the places, and these requirements can be met with. Yes, we find it difficult because the wavelengths are different, but there is a dire need, I would say, to think on those lines. And trust me, what if all these come together and consolidate, there will be much bigger size of funding which will be available to all these, rather than in fact, you would have seen when it comes to private equity or private investor coming in, they are extremely skeptical about when there is a single owner entity. But if there are multiple owners, they have higher comfort level. They are ready to put in money because they don't want the entire exposure onto dependent upon one person itself. Even it happens in the case of startup domain, where there are multiple co-founders. They are happy investing therein rather than something which has been promoted by one person. So all in all, that kind of consolidation is also going to help. But if we simply are thinking in terms of that the government policies are going to help us in reaching to a level which is from small to medium, and the small and medium to the large setup, it will not be possible. It entails in today's scenario huge investment. Anything, starting with 100 crores, which may be difficult for at least, I would say, 95% of the textiles sector itself. So we need to address that by way of consolidation of different business verticals itself. And we have, so many people with such a huge experience. If that gets consolidated, the growth can be much higher.
Another important area that you just rightly said, creating clusters, mini clusters. Now, I have an important question for you, and this is very evident in the Indian ecosystem, particularly, where there are small businesses in different clusters who are part of a network or an associations coming in together. You think that in case if there are 2 or 3 factories or 4 factories with different owners coming in together and approaching a financial institution for raising money, and similarly going to a foreign buyer and approaching him for a bigger order, is that a right way to approach? And will that be backed up by a financial institution if they go and pick up a large order?
Well, you see, there are products available through which this kind of a structure is possible. Ultimately, one will have to consolidate under one entity itself. But yes, if we talk about whether it is doable or not, it is. We have, even the letter of credit structures and the subordinated letter of credits issued by institutions, by banks, once they get the principal letter of credit. So there are products available whereby under these structures also the banks can provide support to the multiple entities. There is a need to have understanding of these financial products and getting it implemented through the bankers.
Wonderful. I think there is a need of getting into this area in a very, very strategic way. Another important point I wanted to understand was the fact that what has recently happened in a couple of Western countries, especially when we see it in US and Europe, a lot of micro factories concept have come up. And this concept is like manufacturing within a small space where entire machinery and automation from end to end, from the sampling to the production, finishing, and output is all been streamlined together. Now, something like this requires a lot of capital investment upfront, but I don't know how can this concept be adopted within the Indian ecosystem, and if it can be from the entrepreneur side, what kind of financing can be done? For example, if there is a factory which, let's say, is ready to put in 4 or 5 crores of money in the machinery. Now, what kind of advantages or what kind of support system is available from the bank or the financial institutions to upgrade themselves into the newer domain?
You see, once this size of equity is available for machinery, there will be a composite project planning wherein part of the money can be utilized for innovation as well, and part of the money in the form of financing to the machinery will be provided by the banks. Generally, banks are wary of investing into the risk capital, innovations, etc. But yes, under the composite product structure where the money will go in the entire project. Innovation is a part of that, and the financing would come. It will be more in the form of indirect financing, but yes, the financing is available under the overall project umbrella. That's one. But what you have touched upon, and the kind of development which are taking place in Europe and US, where we know that they have set up these entities, but they cannot expand up beyond a particular size because of the expensive labor which they have, and they are doing it in at the micro level. Uh, why not to explore the possibility of having collaboration with them and using this technology part itself and innovation, and we here in India works as an extended arm of those units itself. This way there will be a sharing onto the technology part, onto the innovation part, and the capacity building would also be taking place.
You rightly also mentioned on the fact that there are possibilities. How much is the amount of coverage that can be explored one person in investing into machinery or new technology now? What is the rate of interest, if you can highlight from the different institutions? And what is the kind of support system in terms of subsidies that those are available? Do you have any of this information?
Yes. So, the interest rate today is dependent upon the risk factor, risk which is perceived by a bank. And it is highly varied. It starts right from 7% and goes up to even 13, 14%. Now, it warrants, how strong your existing finances are, how strong your existing financial position, visible financial position is. If the balance sheet is strong, the borrowing can take place as low as 7%. So banks are there to fund it. And the extent of funding generally is 2 times the equity by getting infused by the promoter. Now, which can be in the ratio of, the equity can be to the extent of 7:3. So to that extent, banks are ready to provide the support. And if there's a definite plan with, the kind of demand which is arising, the banks are going to fund it. So what they at this point of time are looking at is how much equity the promoter is putting on their own. And if that exists, they are also ready to invest.
So I think most of the areas are more towards from the raising side of it, and that's where the challenges and the offline sales starts coming in. Any final important tips that you would like to share with people? We are almost towards the end of the session now. So any final tips that you would like to give to ensure a financial discipline that can be incorporated for the businesses?
Okay, this is something, which gets applied to all business verticals, and somehow in the midst of execution and regular working, we forget it. I would say, optimum capital, which I'm really talking about, adequate capital is something very important. Then low cost funding is another area. And again, the low cost funding is connected with how much equity which has come, because it gives more comfort to the bank. I would like to give an example as to, Reliance itself, they are the largest one, and they raised huge amount of money through equity as well as through debt. They today are sitting on a huge pile of cash, but on the other side, they have a similar debt also in their balance sheet. So they always say they are net cash surplus, to the tune of 2 lakh crore rupees of funds available, and that much of borrowing also in their balance sheet, because they know cash is king. They have, over these period of time, always kept cash in hand. And when cash is there, on the other side, they have debt, but they have cash as well. So those who have cash always available are in a better position to cut down onto the cost. So first and the foremost, cash flow management. Cash flow at times become even more important than profitability. We in certain projects may not, or certain orders may not have profitability. But if we manage our cash flows, we can cut down onto the prospective losses which may in current situations do arise. There have been a number of cases when there's inadequacy of orders, and it makes sense to accept the orders even if there's no profitability therein, because it meets certain part of the fixed cost. And it's possible when there's a sufficient cash flow available. So cash flow management along with equity and debt is something which is very important. Once it is there, then the sufficient cash also ensures that there's a cost reduction, because one is able to negotiate far better terms. So these are something which is very important areas. And of late, in last 1 decade, something which has taken over everything is the technological development. That has to be brought in, because if that doesn't come, then sooner or later the cost will by default go. So I would put forth all these areas where one needs to focus on to be it equity, debt, but cash flow is the foremost one needs to pay attention to. And then subsequently comes the cost reduction and technological advancement. Once all these 5 parameters are met with, there would be a success. There's no reason why there will not be a success as such.
Thank you so much. That's a very wonderfully explained and very insightfully put in for most of the audience here. 5 main areas where, in case if people are able to maintain their financial discipline, I think there can be long-term sustenance for the business models to grow in. Not only sustenance, but I would say the growth can also be incorporated for a longer period of time. So before we kind of wrap up this today's session, there is a quick question that is coming from Mr. Sharad Nagpal. He says, can you guide us more about the PO financing, LC financing, low-cost funding, and if you can bridge some investors there, that would be great.
Okay. So when it comes to LC financing, this is an area which is very important, particularly in international trade and otherwise also. This all actually starts when you have buyers, when you are accepting the orders, whether the buyer is willing to give letter of credit or not. Taking an open exposure can land you in deep trouble. So letter of credit is something which is very important in trade today and must be insisted upon. If it is not there and there's a reluctance, at least some advance should come from the buyer so that there's a commitment from the buyer. We have seen now buyers walking out of their commitments, and if they have some stake in the form of advance, definitely they will take the delivery of the goods. And otherwise also their commitment is maybe half or no commitment can be there if they do not have anything in terms of financial stakes. Yes, when there's a very long-term association with certain buyers, they do not provide it. But once that situation is existing, then the lenders are there who are ready to provide on the basis of the credential of the buyer itself. Herein, there's another product particularly which is related to the receivable financing or debtor financing or post-shipment financing. It comes to factoring, and I briefly touched upon it. So factoring also comes into when we have a buyer with credentials. But yes, again, for the cash flow management, this is something which needs to be arranged in advance. When you are dealing with a buyer who's not providing letter of credit, obtain the credential through the rating agency, get in touch with us and other agencies where factoring services can be availed. Once there's an approval for the buyer and the vendor both from the factoring agency, the funding can be arranged from that source itself. The other aspect is the kind of support available from the government. It is something when business house does something that the government provides the support. It's nothing like that in advance something is being provided by the government. The policies are very stringent nowadays. Government has also learned quite a lot over a period of time. Recent policies have certain clauses where there's a continuous, I would say, areas which have been plugged in where there were loopholes. So they have made it sure that there's a performance, there's a delivery by the business entity, and only then they avail the incentives.
No, absolutely. And just to add to what you just mentioned out, just about 3 days back, Mr. Piyush Goyal, our Honorable Minister of Textiles, he's announced the rollout of turf policy And especially he's he's announced that whatever funds that were put on hold post the COVID last year, those funds have got released. So there is about another 15,000 crores of money which is coming under the ATAF scheme for the people that have invested for the capital expansion. And now those areas are coming into play. So a lot of positive step coming into that particular area. Apart from it, another important area is an upskilling area, wherein government is also putting in, especially the Ministry of Textiles is rolling out, along with the Ministry of MSME, measures for the people who are coming up on the upskilling programs. So if there are manufacturing setups who are coming in and they want to expand into new areas and are also looking at skilling the people in their own manufacturing units, government is willing to provide subsidies in this particular area. So there are huge amount of subsidies coming into this particular learning area. So I'm sure for anyone who would like to know more about it, they can reach out to us, or we will connect you to the right sources. Even I'm sure Sunilji would also have the ways to share about more information in this area. So Gagan, we are almost done about the session. We're almost on time today. So over to you back. Yeah. Thank you so much, Sunilji, for sharing your insights here.
All right. While I have still one more question which has popped up in the chat box called by Richa. It's a Q&A session which says, how much equity investment can come in the textile business? Is there a limit, or how do we go about it? Sunil?
Well, there is no upper cap as such. So the equity can come. It all depends upon the one who's sourcing it, their bandwidth, what they have delivered in the past, and what they intend to do at this point of time, and what kind of dilution the business owner is ready to give to the equity investor. So there are a number of factors which gets involved in it, but there is no upper limit as such. It's as much as government is coming out with policies where it entails an investment of over 2,000 crores in a single project itself.
Yes. All right. Thank you so much, Sunil. And while
Gagan, sorry, I just want to have one follow-up question on this only. While you said there is no upper cap, so I want to just put a pure example here for you. If there is a company which does a turnover of about 30 crores and is having a real estate assets of 30 crores, which is both plant and machinery, which is the average size of most of the textile manufacturing units, what kind of ballpark figure you see is an equity that can be raised for such units, and a sound profitable companies coming in?
Well, a sound profitable company with turnover of 30 crores may entail, depending upon what kind of profitability and the buyer profile they have, or which segment they are catering to. The valuations can go up to even 200 crores. And depending upon dilution, if somebody is planning even up to the extent of 49% funding to the extent of 100 crores can also come. But generally, this funding comes in only for expansion purposes. If someone is actually looking for cashing it out, then the valuations can be on the lower side.
Okay. So that's a very valid area that I would say. And if there are, I see there are a lot of entrepreneurs in the room, so they can give it a serious thought to this particular area. So today, in case if you're looking to expand without taking a more of a debt into this area, how you can go out and do about it. And I'm sure there are ways to about it, reach about it. So there is a way to this particular area also. I mean, for the textile companies, they can also get benefited from the current valuation matrix which is going out in the market. So yeah, thank you so much, Sunilji, for sharing your wonderful thoughts here. Over to you, Gagan.
Thank you so much. Thank you so much, Sonil. And at this point, before I thank Sunil, we have posted a link in the chat box which says, if you liked our session today and want to connect with the consultant, there is a link which we have put. And let me tell you what will happen with that link. Once you put that link and you want your consent to connect with the consultant, in case you want, in this case, Sunil, want to help you, please give your request, and we will have you. Our team will connect with you shortly after that, and we will patch you up with Sunil's team, and then ultimately you may be able to work with Sunil for that matter. Why not? And why I'm saying this, because now all of this whole of this process, like I said earlier in my presentation, has been brought under our Consultant Connect wing, whereby we are bringing in the top consultants to you from India, within India, and of course now very soon coming consultants from outside the country as well, where you will be able to get the best of the advice for the industry. And soon you will be able to see them live on SowtexConnect portal, which has been specifically designed for that. And not only that, you will be able to see all of these sessions, recorded sessions on SowtexConnect website very, very soon. But for this moment, at this point, just click on the link and connect with the consultant in case you wish to, right? And at this point, Ashoka Chakravarti says, thank you for offering such a wonderful session, which is the need of the hour. Thank you so much, Ashoka, for joining our session. And there you go. Sonal has put the link called connect.sotex.com, and you will be able to see all of that, what we are trying to say at this point. And with this, I would also request one more thing. You also have another link which has been posted. In case you like the session and you have been liking SowtexConnect sessions, then take 5 seconds to review us on Google. It'll be really wonderful. And with this, I would like to thank Sunil for such a wonderful value which you gave to us, which you gave to the community, such wonderful insight which can only come from a person who's got decades of experience within the industry, and tons of knowledge, not only from the past, but also up to date with the latest, what is happening in the industry. Thank you for adding so much of value, Sunil. It has been an absolute pleasure that we have you on board today. Thank you so much.
Thank you. Thanks a lot. And in fact, I would like to add to it, you're doing a wonderful job, like connecting this textile industry. And definitely, I can see that it will impact the cost factor of many industries. And in fact, when you're connecting on different areas, there's another area which is coming up, and as I talked about, which is bringing a number of entities under one umbrella or wherever they intend to. So that's another connect point you can explore on your platform, where like-minded people would like to come under one umbrella itself and execute the orders, or consolidate their business entities or their capacities. You can explore this as well, because these are both challenging and opportunity driving aspects.
Absolutely. Thank you so much, Sunil, for the advice, and definitely we will definitely make sure that we take more of advice from you to get ahead with that. And at this point, I would
just to share to just to give a validation to this area, we are giving this as a value proposition to all the members who are part of the SowtexConnect community on the SowtexConnect platform. They have the option of creating their own digital portfolios. With the portfolios, what it means is not only have their information or their profiles on the platform, but also about their designs, their stocks, their capacities, whatever they have, whether the capacities, they have the installed capacity or they have the idle capacities, they can post it on the platform and people can search and collaborate there itself. That's part of initiative which we're already bringing it on. It's available through Sotex virtual app, which are both on the web as well as on the mobile. So anyone who wants to do that, we are already doing that. We have not populated it too much at this point of time. We have not been sharing it too much, but that gives us a food of thought from you, Sunil. So we will be putting up and incorporating that kind of ideas also during our briefing on SowtexConnect. So thank you for giving that thought back to us. Thank you.
Great. Thank you, and thank you to you, Sunil, for bringing in always the industry perspective and the challenges which industry faces, and a very unique set of questions which being interacting with the industry quite a bit. Thank you so much for keeping to add value to these sessions, which is truly wonderful. And with this, I would like. It is our session just a week before Diwali. And now, practically at SowtexConnect, we will be meeting you after Diwali. So I would like you all to happy festivities as well as a wonderful, wonderful Diwali to all of you. And yes, keep looking for more information from SowtexConnect. And just after Diwali, we will be back in action again with tons of events which are already planned. And yes, the first one coming up is networking meet after that, which will happen just a week after Diwali. With this, I would like to have Sonal some last thoughts about how are we going forward with this.
Thank you, Gagan. And so to all the users and all the attendees for our session, wishing you a very, very happy Diwali in advance and best of festivities in the coming days. Post Diwali, we'll be having a lot of information coming in for you. SowtexConnect is going to be, we've already shared the link in the chat box. You can go ahead and look at the new application which is coming in, which is creating an ecosystem for the members of the community to come and engage with the consultants and go back and review all the sessions and all the content that has been shared on the SowtexConnect sessions. So all the 18 months of engagements that we have done over the course of COVID with all the consultants from different topics and different areas that we touched upon, all that content is going to be coming and being accessed to you live. So it's all free of cost, all complimentary. That's our value addition from the Sotex to the community at large. You can just go up and filter it out, look at the sessions, look at the consultants that you would like to connect with. So a lot of value getting added. And post the Diwali, you wouldn't be knowing that there is a lot of action which has been planned by Gagan. So a lot of sessions, collaborations, and we're coming up with the hybrid model. So there are events which are happening on virtual mode. There are events which are happening on the physical mode. So a lot of will be coming as part of the announcement over the course of next few days. So a lot of things coming in pipeline. So we are all excited here, and we wish you all a very, very happy Diwali. So closing comments from Sunilji. Do you want to say anything as a final comment to the audience here?
Happy Diwali to everyone. And the times to come are definitely very, very good. One should be optimistic. Things are returning back, and best of luck to everyone.
Thank you. Right. Thank you so much.
Thank you. Thank you so much. And with this, we would like to officially close today's session with a wonderful goodbye and happy festivities and happy Diwali to you all. We will be looking forward to seeing you sometime very, very soon. Wonderful. Have a good, wonderful Diwali. Keep safe and enjoy well with your family. Thank you so much.
Thank you so much, everyone. Wish you a very happy Diwali.